Back, we're going to try to do a quick run through of what happened with Bitcoin over the weekend. As stated, well, it's stated in my group and in the last video, the weekend was going to be an opportunity to recover after pretty much devastating U.S. banking type of news with SVB Silicon Valley Bank going under over pretty much overnight on Friday, and that affected USDC in a way. To give you the backstory for what was going on and pretty much why we got this dip, and just to expedite what what basically happened was there was fear that USDC was going to go under as well, and the worst case scenario that is coming out of it is that it dropped, the pegging for it dropped 8%, and that whatever isn't pegged by Monday will be covered by Coinbase and what was the group? Goldman Sachs, to cover the difference in the market, and USDC is going to be just fine. And they probably only lost a few $100 million or a little less than $1 billion in this drop. And so what it did, it caused an emotional drop. People got out. People took their money out of USDC. They put it into USD Tether. They put it into any other stable coin that wasn't USDC, that caused the drop. And it also caused an uncharacteristic drop in Bitcoin as well. We wanted to ultimately, we wanted to hold the 22,300 level, which ironically we're back up to. And in the last video, I mentioned, or last time we talked, we were at the, if I can get to it, we were at the, we'll stay on the 12-hour. We were at the 618 mark down here. We were at this 618 marker, Fibonacci mark at 19,700. We didn't go any lower than that. It's a pretty significant level, as I mentioned in the last video. And we pretty much bounced from there during the weekend. It was a picture perfect opportunity to bouncing off of that significant level. Keep that level in mind again. And we bounced all the way back up past my level I expected it to at 21,800. We bounced all the way back up to 22,800. I didn't say it on social media anywhere, but conversations I was having, that it would go as high as 23,200 at this level here. Could still go there, but what I see foreshadow happening for tomorrow, there's a big gap in between here. I just use this arrow as a big gap between here and here that the banks that don't trade on the weekend want to fill. And I believe there may be a lot of shorting that comes in to fill that gap back down sometime during the day tomorrow, or on Monday. And then we bounce from there. That's the technical version of what would happen, but there is also an option where we go all the way back up to 23,200, 23,600. And, we look very bullish because it was an over emotional move on news that ultimately didn't end up being true. And right now we're at 22,500. And I think we're back in the conversation of, if we stay within this yellow channel here, if we bounce back and get back within this yellow channel here, then we're bullish again. A lot of risk off money is going to come back in my opinion, is going to come back into crypto, because the US dollar is looking like what we call a shit coin. It's looking like crap. It's been crap for a long time, and now here we are. We can't even trust one of the largest banks in America and their FDIC policy to keep us safe and insured. So a lot of money could be going back into crypto, and specifically into Bitcoin, because nothing can be trusted. Stable coins can hardly be trusted right now. So keep a lookout again for this gap to be filled down here. Anything that does happen tomorrow is going to be a panic move. Even if we go shoot up all the way back up to 24,000 or 22,000, 23,300, 400 back into this channel, the top of this channel could also serve as a resistance level if we do stay below it. So keep that in mind. And that's how I'm going to leave it for today. Play it safe on Monday and on Tuesday if you're unsure where the market's going to go. These quick moves like this are unsustainable and they hardly last. So I would just not play it until, you know, we have a legit pattern that's forming somewhere. All right, so we're going to leave it at that. Thanks, everybody.